Markets face highest volatility as US equities retreat on Fed independence concerns, oil extends gains amid Iran tensions, and dollar-yen hovers near a breakout ahead of key US CPI data. So, hello everyone and welcome back to another weekly technical outlook here at xn.com. And we're going to have a start with the US500 that it retreated from the record peak slightly below the 7,000 round number that it failed to reach, and is currently moving downwards towards the short-term SMAs near the 68.74 and this support level, which is the previous bottom at 68.22. More losses it may drive the market towards this uptrend line in the 67.25 area, but if there is a daily close below that line, then it may switch the outlook to a more neutral one, testing again this support level at 65.08 that it reached back in September and also in November of the previous year. Now, on the other hand, if there is successful climb above the 7,000 level, which is also the 161.8% Fibonacci extension level of this big downside correction that we had in the previous year, and then the market, it may extend its bullish movement towards the next round numbers. Having a look at the technical oscillators, the RSI is pointing downward slightly above the 50 region. The MACD is moving sideways above the zero area, so the technical oscillators are confirming the weak momentum that we have right now in the market. Now, switching to oil prices, that we had a rebound of the 55.85 area in the previous week, and the price successfully surpassed this descending trend line, the short-term SMAs and the 59 round number, and is moving right now near its opening level. And if there is a more rising movement, then the market, it may achieve the 61.40 resistance and the 200-day SMA at 62.74. Now, if there is a rally above this area here, then it may switch the outlook to a more positive one in the short-term view. However, if there is a break back beneath this descending trend line, then the bias, it will return to a more negative one, testing the 55.85 and the 5-year low at 55.10. Now, the RSI and the MACD are moving sideways, slightly, the RSI slightly above the 50 region, the MACD near its trigger and zero line. So they are suggesting that this bullish movement that we have in the previous couple of days, it may return to the downside, and we may see the price moving below these SMAs. But if the price remains above the 59 round number, then the likelihood it will raise to the upside. Now, switching to dollar-yen, currently the market is holding near the upper boundary of this consolidation area, with the lower boundary, the 154.30 and the 157.90 resistance. If there is a successful move above it and we are going to have a closing day above this area, then the price, it may hit the 158.86 resistance and the 160.20, and it will confirm this bullish tendency that is started back in April of 2025. However, if the price retreats again and remains within this trading range, then the short-term SMAs at 156.50 and the 155.60 support level, it will be the next target to look at. The MACD oscillator is holding slightly above its trigger line and above the zero area. The stochastic is trying to overcome the 80 region, suggesting that we are maybe getting into an overbought territory. So I think that it will be very important to have a look if the market will remain above the 157.90 area, or if the price, it will retreat back beneath this trading range in the short term. So that's all from me. Thank you for watching and have a great day.